Hello, my name is Yana, and today I want to present you a presentation on the topic Social Security, Medicare, and unemployment taxes, and also we are going to review an article. Learning objectives: Social Security taxes, Medicare taxes, unemployment taxes, and article review. Millions are suddenly working from home. Can they claim a tax break? First, let's talk about FICA taxes, which include Social Security and Medicare taxes. There are certain taxes on income that everyone has to pay, and FICA taxes are at the top of the list. And employers must withhold these taxes from employee paycheck and pay them to the Internal Service Revenue. FICA taxes are the Social Security and Medicare taxes paid by individuals and employers. FICA taxes are called payroll taxes because they are based on the amount paid to employees. These taxes has two elements: withheld from employee paycheck and paid by employers for Social Security and Medicare. In this presentation, we will find out how to calculate FICA taxes, how to report and pay these taxes, what earnings are not part of FICA taxes, and more. The term FICA is short for the Federal Insurance Contribution Act. The act was introduced in the 1930s to pay for Social Security. Medicare was added later. The breakdown of FICA taxes. The total tax is 15.3%. That percentage is applied to the employee's gross pay. The employer and employees each pay 7.65%. Here is the breakdown of these taxes. Within the 7.65%, the portion is 6.2% up to the annual maximum wage subject to the Social Security. The Medicare portion is 1.45% for each employee and all employee earnings. In October 10, 2019, the Social Security Administration announced that in 2020, Social Security wage base will be $137,700. So from this table we can see who pay taxes and what portion, what is employee's part and what is employer part. What wages are subject to withholding? The IRS said that these FICA taxes are due on wages paid to service performed as an employee in the United States, regardless of the citizenship or residence of either the employee or the employer. In other words, anyone working as an employee in the United States must have Social Security and Medicare tax withheld from wages. At the time the employee is paid, the FICA taxes is calculated on the gross pay of that individual. Here is how it works. The employee gross pay is calculated for the pay period depending on whether the employee is salaried. The gross pay amount is used to calculate withholding for federal and state income taxes based on the employee W-4 form. The gross pay amount is also used to calculate withholding for the FICA taxes. Here is an example. Let's assume that Paul earned gross pay of $400. His current year taxable earning for Social Security tax up to date $83,900. Solution: current period taxable earnings of $400 added to the year-to-date earnings of $83,900. The result is $84,300. Result doesn't exceed the taxable base $1,037,700. Social Security tax for this employee is $24.80 and Medicare taxes is $5.80. What income doesn't include for Social Security? The first $20 of most income received in a month, the value of Supplement Nutrition Assistance Program food stamps received, income tax refunds, home energy assistance based on needs funded by the state or local government, small amounts of income received irregularly or infrequently, interest on dividends earned on countable resource or excluded under the federal laws, grant, scholarship, fellowship of gift used to the tuition, disaster resistance. Now let's talk about FUTA taxes. FUTA, the Federal Unemployment Tax Act, is a federal law that requires employers to pay unemployment taxes. These taxes fund the federal government oversight of the unemployment program in all 50 states. Typically, only employers pay FUTA taxes. Every employer must calculate the FUTA tax liability for each payroll, set aside an amount after each payroll equal to that liability, make periodic payments to the IRS based on the amount owed, submit an annual report on a Form 940 Employer Annual Federal Unemployment Tax Return. Also, employer must pay FUTA taxes. However, FUTA and SUTA taxes rates must be not the same. Calculating your FUTA tax liability. You must pay federal unemployment tax based on employee wages or salaries. The FUTA tax is 6% on the first $7,000 of income for each employee. Most employers receive a maximum credit of up to 5.4%. Again, the FUTA tax for allowable tax and employment tax. Consequently, the effective rate works out of 0.6%. Now we are going to our second part of the presentation. This article is from the Wall Street Journal named "Millions Are Suddenly Working from Home. Can They Claim a Tax Break?" This article is written by Laura Sanders. So the article is about coronavirus pandemic, working from home, what expenses can be deducted from income and reduce taxable income. The purpose of writing this article is, does your remote work qualify for any tax breaks? Now let's read some important ideas from this article. Due to the coronavirus pandemic, millions of Americans are forced to work from home. Both employers and employees are wondering how they will pay taxes and expenses they can deduct. Most from these people must convert their bedroom into offices. That means that people must buy chairs, tables, and some of them even computers. Employees will pay increased utility expenses. Whose responsibility is it in the form situation? Who can claim it as an expenses for tax purposes? One was a partial deduction of unreimbursed employee expenses such as a home office or union dues, but employers can claim these deductions based on reimbursement to the worker. The good news for workers is that the breaks can help employees with the range of pandemic expenses, and the payments don't count as compensation either for income or FICA taxes. A simple way for many employers to help employees to have costs from working from home due to the pandemic is to reimburse them under the Section 139 of the Federal Tax Code. This law passed in the wake of September 11th terrorist attack and allows reimbursement of the payment for reasonable and necessary personal, family, living, or funeral expense due to the eligible disaster. Notice this law allows deduction for payments of reasonable expenses. They seem extended to be more generous than ordinary expenses. The term as well in the law, said Mrs. Murphy. It could include, say, full reimbursement of expenses for childcare as well as for a computer or additional utility cost. Under the Section 139, disaster payment can be tax-free for workers and deductible by the company. Shareholders who are also employees of an S or C corporation can qualify for them as well. Directors and partners can be eligible for these payments, although the law isn't clear. Unusually for the tax code, Section 139 cuts red tape. Payments don't have to be included on a worker's W-2 tax form, and the company doesn't have to document actual expenses as long as the payments are expected to be close to them. Complex employee benefits rules about which workers get what benefits don't apply either. Here is the conclusion. Today we talked about the FICA taxes. We defined what is included in FICA taxes, Social Security and Medicare taxes. We defined how to calculate Social Security taxes along with the Medicare taxes. We talked about also FUTA taxes, namely rates. In this presentation, we even talked about article that was written by Laura Sanders. The most important points in this article, namely how millions of Americans working from home due to the coronavirus pandemic will be qualifying for any tax breaks. Here is the sources that I included, and thank you for your attention.